Thank you very much for coming to this panel, talking about this question of is there an enterprise bubble? And as I assume you know, enterprise is just a fancy word for business. The genesis of this conversation really was going back to Brainstorm Tech of last year, which was maybe 2 months after the Facebook IPO, the most disappointing $16 billion IPO in history. And there was kind of this question of if consumer tech is being soured on a bit, is there going to be anything that replaces it in terms of hype, in terms of popularity, or is there going to be a broader kind of tech lull? And what seemed to replace it over the last year, or 10 months at least, to a certain extent, at least if you judge by IPOs, and we've got 3 folks up here who have completed IPOs since Brainstorm Tech of last year. I'm right about that, right? Since Brainstorm Tech of last year? Yeah. Oh, no, you were a little before. OK. It has been enterprise. When you look at the values these companies are trading at, when you look at the way these companies have gone public successfully and traded higher in the aftermarket, and then when you look at the private markets, what's happened in terms of where the valuations have gone. And so I kind of have this general question of, was this a legitimate correction? These are considered, compared, with all due respect, compared to Facebook or Twitter, traditionally considered, at least by the tech press, less sexy, less interesting companies, maybe because the average 13-year-old isn't using them. Or has this been an overcorrection? Has it gone so far in the opposite direction that part of what's caused some of these valuations has been a pushback against what happened to consumer? So that's kind of what I wanted to speak about a bit today. Again, we've got a good panel. We've got 3 enterprise tech CEOs up here. We have venture capitalists, and we have somebody who works at AT&T who offers a lot of enterprise products, deals with enterprise. And I'm going to ask you guys to just very briefly introduce yourself. And even though it's not a consumer panel, think of the imagine you're describing yourself and your company on Twitter, and you only have 1 tweet.
Deven, Parekh, Managing Director, Insight, $7 billion of capital under management, consumer and internet investing.
Christian Chabot, the CEO of Tableau software. We make products that help people see and understand data. So if you wanted to harness the power of data stored in a database or a spreadsheet, visualize it, answer questions with it, and share the results, then you use Tableau.
Godfrey Sullivan, CEO of Splunk. We index and analyze machine-generated data. And so that's what you do with Splunk. Search it, analyze it, report on it. So we bring value to a new generation of data, which is what's being created by the devices.
Tony Zingale, the CEO of Jive software. We bring social software to the enterprise in an enterprise-ready fashion at scale, enterprise readiness, secure, private, and allow enterprises to work differently than stuck in their email inbox.
Michael Bollane, the Chief Marketing Officer for AT&T Business. So that's every business customer from the flower shop at the corner to the federal government. We serve all of the Fortune 1000. It's a $70 billion business that brings everything from fixed mobile solutions, applications, cloud, and just
and as of today, serving Disney World as well.
And as of today, serving Disney as well.
But I've been told they cannot help you cut the line, so the value. We do not know what the value proposition really is.
Fast on your phone.
Yeah. So here's an interesting factoid about AT&T. It has something earnings. It's got something called earnings, which. So but yet trades, and granted, it's a much larger company than any of your companies are in terms of market cap, et cetera, and obviously it's been around forever. But it trades, you can't exactly do a PE ratio, but it trades much lower than your companies do percentage-wise. And I guess, so my first question is a general question. Maybe this is a general question, and Salesforce, I guess, could fall into this too. From your perspective, do earnings matter? In other words, is that something you're really looking at and saying, we really want to achieve GAAP profitability by, or is it something you say, if it comes, it comes, but not really something that's driving us? For Tony, start with you.
Yeah. In our businesses, I'll speak for Jives, what investors reward us for is growth. We're a young company. We're not the size or scale or maturity of AT&T. What gets rewarded is the growth agenda. You have to have an eye towards profitability. You have to have a model that shows consistent progress from a margin perspective, a cash flow perspective, et cetera, towards the path to profitability. But it's all about investing in your business to scale it as fast as possible and grow, not at the expense of profitability, but grow to, in fact, secure the largest, quickest market share that's possible.
Do you guys disagree, or is that kind of how you view it as well?
Yeah, I think especially if you're viewed as the first mover in a category, a big part of your thesis for your S1 and subsequent IPO will be the financial model. And our investors absolutely reward us and expect us to focus on growth, less so on profitability, but with a path to. And if your growth starts to slow down, you'd better be in a position to start creating a more profitable model. But the market, the investors absolutely support investing for growth.
But growth does eventually slow down, right? Or is the view that with this kind of stuff you're doing, that the potential market, the potential customer market is still so vast because we're talking about these kind of secular big changes, and there's so many that the slowdown doesn't have to come anytime in the foreseeable future?
Well, it's a scale. So if your growth starts with a 3 or a 4 or a 5, the investors see that and would clearly point you towards a growth-oriented investment model. You slow down below something that doesn't start with a 3, like maybe a 2 or a 1, you'd better be on a path to profitability. So the investors are pretty clear about where they see the break points between a growth model and a profitability model.
I wonder, you guys are, Splunk's about $5 billion and a little bit beyond that market cap. Right. Appropriate valuation, overvalued, undervalued? I know your answer, but I just want to ask it.
The market is perfect in its valuation.
So if your shares drop $5 tomorrow, market's still A-okay?
It is what it is. You know, most CEOs have spent their lives complaining that they're undervalued. So it's a little bit of an odd position to be in where you have a 15x revenue multiple and say, defend it, so.
Christian, I'm curious for you, one of the things when I looked at you, and we won't just talk financials here, but I'm curious, when I looked at you guys, one of the things that jumps out is you have a really small float, I think, less than 20% of the company that's outstanding. Yeah. Is that something that's simply because you guys you've been public shorter time than these other guys, or is that something intentional that you want to keep relatively low for as long as you can?
Well, the company wasn't fundamentally driven by a need for capital. And so we sold an amount of the company that we thought was required to make it a liquid market in our stock. That actually determined how much we sold. That required secondary selling by existing shareholders. So we got it up to a level that I think most investors are happy with. And the size of the offering was such that big investors were able to put enough absolute dollars to work, which is more the way they think about it than percent of the company.
Fair enough.
By the way, can I make one comment about the why behind the growth thing?
Yeah. Oh, yeah. We will talk about it.
Yeah. I just think the root reason is simple, which is there was a time, the dot-com era, when people were really into business model innovation. Remember that, 99 to 03? VCs would take meetings and they'd be, you literally get to the section. Tell us about your business model. And there'd be like 12 slides explaining it. Oh, it's the double slack, back slap, up and grab, link back. 12, and it's baffling, right? Some of which worked, most of which didn't. In what we do, this is really simple. Go sort the world's biggest business technology companies, even business software companies, by market cap. They print cash, and they're extremely hard to replace and displace. And what investors want is the next one of those. And so if we perform the way we can perform, they know what it looks like at scale. So I guess what I'm saying is we no longer have to hypothesize what we will look like financially at scale. Investors know exactly what it will look like. It will be extremely attractive. And the last thing as a result they want to see us doing now is printing cash, because it's all about getting to that growth position that they dream about. That's the root of the river, in my opinion.
Deven, for you, on the private investment side, when you look at enterprise companies, I wonder, is it, and maybe this is obvious, but because you do both consumer and enterprise companies, you, I assume, do models, et cetera, because you're doing late-stage investing. When you look back on it, do the enterprise models, are they closer to being right in the end when you look back than the consumer ones were? Significantly so?
The answer is today much more so because the revenue models have changed. And that's one of the things I want to talk about. Just putting a little bit of historical context. If you go back to 2004, there was a company that had a revenue run rate of about $100 million that was going public. There was a huge debate about whether or not it was going to get overvalued. It was Salesforce. Okay. And it priced at 8 times revenues, traded up to 10, and people were like, oh my God. If you held that stock, it's a 30x return, 30x multiple. And so and I did a little bit of research this morning, and the average revenue multiple, not including AT&T, up here is about 16 times 2013 consensus revenue.
That's because Godfrey's messing it all up.
And so the question is, if you look at that relative to historical norms for software, it's high. But if you look at it relative to the business models, it fundamentally changed as well. And you have a much higher predictability in the revenue stream. And I think that I'm going to use a restaurant analogy, which is something totally different. But if you were going to roll out a restaurant, you'd say, okay, I want to make sure the four-wall economics of that restaurant work. And then once I'm confident that that happens, I want to open up as many as I can. I'm going to spend money on marketing. I'm going to spend money on sales. Spend all the things I need to do to really expand this. And then once I get to scale, I'm going to have the operating leverage because I know my four-wall economics work. And these businesses are very much like that. And so what we analyze when we're looking at a business is what's the retention, what's the retention rate, what's the upsell rate. A lot of these companies have land and expand models as well. So we're an investor in a company called New Relic, and CEO talks about customers who are paying us $1 million a year today started as $400 a month customers 4 years ago. I'm sure you guys have these stories. So I think there's been a fundamental change in the way these business models work. There's been a fundamental change in the sales and distribution strategy for these businesses. There's lower cost ways to distribute these products. And so the economic value, discounted cash flow, taken over the appropriate period of time, I think can justify valuations that are really high. One other point I'll make. Where I would say that sometimes valuations can get out of whack is that there's sometimes, and I would say this is true in my business for sure, there's not enough of a differentiation between business models, right? So people say, oh, it's a SaaS business. Okay, well, I've seen SaaS businesses with 90% retention rates and SaaS businesses with 60% retention rates. I've seen SaaS businesses which need very little professional services implementation. I've seen ones that require a lot of professional service implementation. So people always want the quick answer, is there a bubble? And the reality is that for, I think, a lot of really well-run SaaS businesses, they justify premium valuations. There's not sometimes enough differentiation in the market. And the last one is total addressable market, right? I think everyone up here has got a really large, I'm not an investor in any of these companies, by the way, but unfortunately. But they all have large total addressable markets. There are certainly companies out there, I won't name any public companies, that I would argue don't have particularly large addressable markets.
You can name them.
I prefer not to. But have probably a similar revenue multiple to the folks up here.
By the way, that was the third restaurant analogy I've heard in this conference. Clearly, we
need the first from me.
First from you, but clearly we need like a Fortune Brainstorm restaurant or something with the exact same crowd coming back to Aspen. Like, let me ask you, when you see companies, and obviously you're not directly competing, but when you see Jive, when you see this kind of new generation of enterprise tech companies coming out, and you're often selling to, and a lot of your customers, the people you're dealing with, are people who are also theoretically customers of a Splunk or something else for some other part of their business. I guess I'll ask the traditional question, which is there's always a theory that these younger companies are more nimble, are more responsive to customers, and are faster. Do you feel that you kind of have to change culture a little bit within AT&T or being part of a large organization so you can meet those expectations because those customers are getting that potentially from some of these other younger, smaller companies?
I think there's a couple things around that. One is we work with a lot of customers, large and small. We're just seeing an incredible level of innovation in their business process, service model. How do they basically create an untethered business? And what these companies are doing is they're solving some important business problems. And so they're creating value in terms of those companies. And no one company is going to be able to produce all the solutions that are going to exist out there. So we've done that with some large customers where we bring it all together from a solution. But at the same time, one of the most powerful ideas that we're investing in AT&T is the notion of APIs and platforms, right? Because what we want to do is be able to expose tools and capabilities that AT&T has that these companies can rely on and pull on, because there are things that AT&T does well that, quite frankly, these guys would like to lean on us. And what better distribution model than to plug into all these new innovations? And you look at big data, we've worked with some large container companies, and just understanding the insight that they need from the data, well, guess what helps fuel that? Our machine-to-machine business and generating a lot of that data. So I don't necessarily see it as an either-or. I think there's a powerful combination as we're in the market.
That's interesting. You talked, we talk so much, and you talked about growth. And one of the things, obviously, that's driving growth are these changes, which even though your particular solutions are novel, but there's some broader things, cloud, broadly speaking cloud, broadly speaking mobile, which aren't the things you're responsible for. I wonder, let me see how to say this best. When you've looked in the past, when you've looked at recessionary years, whether it was the Great Recession of 08, 09, or even going back beyond that, one of the first things that always seems to go is enterprise spend on technology. It always seems to just, first hiring, I guess, then enterprise spend on technology. And there's even this theory that people will say, you know what, even if I know this is good for us, even if I know this will save us money and increase productivity down the line, CMO will say, I can't get a new expense done. I can't bring in a new vendor for anything. Do you feel if there is some sort of economic downturn, your companies have been growing in a recovery of sorts, do you believe those secular trends, the mobile, cloud, et cetera, are going to be strong enough to counteract that, and that if there is a downturn, you'll still be okay because those broader trends are stronger than a macroeconomic downturn?
I think there will be a shift in spend. So even before there was a term called big data, there were AT&T and some of their fellow telcos were harvesting this brand new generation of data that was coming off of cell phones, digital devices, mobile devices of all kind. Massive importance in terms of the value in that data. If they had to stop spending on something in order to spend money on that, they would. So I think a big part of it's, are you at the top of the CapEx list? Are you in vogue in terms of being currency, high currency, in terms of where companies will spend? Because they will make spending choices. And we were just lucky that during the 2008, 2009 period, we were sort of young and small. Our ASPs are quite low. Implementation's quite short. Customers were willing to spend money on that, even though they were probably crimping some of their big spend items elsewhere. So,
I was going to add to that is that if you look at just the fundamental buying behavior in a perpetual model, the historical model, in effect, the customer was financing the companies. And in a subscription model, in effect, the company is financing the customer. And we're basically funding the spread until they get to profitability. And so from the standpoint of what happens in a tough market is you're much likelier to cut a perpetual spend product or something where you have to do all the CapEx up front as opposed to something that's a lot lower total cost of ownership solution. And so when we look in our portfolio in that 08, 09 time period, look, everything's growth rate slowed down. So to say that in a really tough economy, you're not going to have any, but our SaaS companies or subscription-based companies saw the least impact across the portfolio.
And some things never change. I mean, to Godfrey's point, you better be delivering value, particularly in the SaaS business, because that moment of truth, the one-year renewal, comes up, and you better be on the short list of having delivered value, and your business champion and the facts better be on your side when it's time for renewals. And to your point about the upsell, that's also the moment of truth if you have to sell more. The land and expand strategy in the SaaS model is the beauty of it, if in fact you can prove it out. The point around that you're making around this disruption around social and mobile and cloud and big data, that's here.
I like you. It's good you got social in there because I didn't say that.
Because there's got to be a better way to communicate than we are, other than on smart devices, of course. That's part of it. But this whole replatforming of the enterprise is part of the genesis of why these companies like Splunk and Tableau and others, we could go down the list, are in fact emerging as opportunistic. And they're becoming must-have in the enterprises versus the old guys, perpetual spend, the old stack, are the Microsofts and IBMs, et cetera, going to be able to pivot? That word that we hated yesterday when Michael Moritz was talking, pivot to a new way of platform in the enterprise? It would appear not, given what's going on
Based
here.
on what was said, Michael, I got two questions for you separate. So I'll ask first, Godfrey talked about stack and not stack as we think about it in tech, but stack in terms of priorities for a company. I wonder for you, within your business at AT&T, what are those kind of top priorities and things you're spending on and investing on? In other words, if there was some sort of massive downturn and you guys did have to make cuts, what would be the untouchable things?
Well, I think at the core of it is communications and the technology to help bring it together. And really, how do we span wireless and wireline? The notion of those being two different things is really a harbinger of Wall Street and the telcos. Customers don't think about solutions in that context, but how do we make networking seamless across wireless and wireline, right? How does the virtual private network, which is secure, reliable, and has high performance, how do you make that as simple on your iPad as it is when you sit down at your desktop? So that's the core. But then how do we layer up on that in terms of platform capabilities like cloud, right? That's a key component of what we're doing. And core to everything is security. So that's one of the big trends that we're seeing and one of the challenges for enterprises. But one of the things the big trends that I see, I think that's helping everybody at this table is the progressive CIOs and the progressive technologists inside the companies are no longer trying to drive a one-size-fits-all. I recently met with a CIO that talked about how their goal was to drive efficiency into the organization. He said that was driven by adopting new capabilities, new tools. And when they tried to prescribe one tool set to the entire organization, adoption wasn't there. So what they've done, the progressive technologists are basically leaning in and saying, if you want to use this technology or that technology, how do they become enablers rather than what used to be the roadblocks? And I think that's what's helping, all of these companies that are driving real value, but in a very specialized way. And then kind of the land and expand model that you described, I think is finding those types of customers is really powerful.
I'm wondering for you guys, are the employees, when I said the employees, the non-CMO, the non-CIO, is that where you're going getting your initial traction in a new company in the first place? In other words, as opposed to what we would consider to be the traditional model, which is you go in and you pitch to the person at the top who then, if they buy it, then filters it on down. Is it what you guys are finding, just because it is so easy for folks in so many cases now to download these solutions, start using them on their own, that what's happening is somebody 5 levels down is starting to use Splunk, is starting to use Tableau for whatever they're doing, and that then filters up, and that conversation then goes that way. I'm curious, where are you seeing your entry point more often?
I think what you just described is the predominant wave in all of business software. There are exceptions like Workday, but the predominant wave in all of business technology is a move towards land and expand selling. It's a huge win for the companies, and it's a huge win for the customer who has to take less risk and many other benefits. And so, there was a day not that long ago where to sell business technology to a company, you had Armani-clad field sales guys with a full-time sales engineer following them around like a puppy dog, with a big corn-fed teeth smile, knocking on the door of the CIO.
So we should short Armani.
And to be precise, getting in line to knock on the door of the CIO. Clearly not a win for us and inefficient for the customer. Those days, I personally believe you can't build a company like that anymore. I'd be happy.
Although you said Workday. I mean, granted, it's a different sort of thing that they're trying.
Yeah, I think they're aided by going through a different department. But anyway, that's a side story. But in any case, there can be exceptions to anything, but it's the predominant wave is what I'll stick with.
I agree with that. Enterprise software success in the future is built on user delight. That same way you have to like the app you're using on your mobile phone or your iPad, you'll have to feel that way about the enterprise software you're using. And that's where you folks have been so successful. Tableau, I think Splunk, you could download it, people used it, they like it. Pretty soon you have an army of sysadmin champions or business analyst champions, and they'll go sell uphill for you.
I wonder, how do you market that then? Because as you said, because you don't have the Armani-clad guys who knock on the obvious door and sell to the obvious person. I assume, therefore, the marketing, the sales budget, for lack of a better term, partially is gone to market. How do you market to that person? How do you market to those people in the middle?
Well, the way we marketed to the guys who were our core customers was with really edgy T-shirts. Most of the slogans I couldn't repeat since we're on video, but it was really popular with those guys because they're some pretty edgy guys. But as you then continue to expand from a small use case or a department across the enterprise, then you have to go in upstairs and have a business value conversation. Yeah. But it sure helps if you have a fanatical army right behind you.
Yeah, do you also have obscene T-shirts?
No. Well, of course we do. But the one argument, the clincher is what Godfrey just said. I agree with you. However, Jive, we do both. And you have to have an enterprise selling force. When you're going to sell 100,000 seats to someone and extract 7 or 8 figures, and you're going to get thrown over the wall to the corporate IT organization and the professional procurement staff and legal staff at AT&T. If you want the 7-8 figure deal, you better be able to, in fact.
My guess is you're not starting that way, though.
You're not starting that way.
Yeah.
But if you want to end there, back to the previous conversation, the growth agenda, the way you grow is big deals ultimately. And to get the big deals from the land and expand and all this groundswell is, you better be able to know how to negotiate an 8-figure deal with a company like AT&T. Otherwise, you're not going to get there.
I was just going to make the point that you made about the consumerization of the enterprise, I think, is really important because everyone's a buyer. Everyone has a smartphone. Everyone's downloading applications. Everyone's using technology. So as an example, how does Dropbox get into an enterprise? Dropbox gets enterprise because one person downloads it, invites one person, then all of a sudden, then somebody compliant says, oh my God, this isn't compliant.
Yeah.
But by then, it's got 400 gigabytes of stuff on it, and they're trying to figure out what to do. So I think that that consumerization of the enterprise trend is really important because it also changes the sales because you can sell to anybody in an enterprise.
I wonder, though, from the top down, the more traditional model, or when this stuff filters up, I guess might be the better way to say it. How important is it? Michael, you talked about the fact that CEOs are changing. I wonder how much of that, and I guess say this crassly, how much of that is age? In other words, the fact that you've got a lot of CIOs and CMOs who, rather than being 60 or are 30 maybe, and therefore might have not necessarily grown up with Splunk or grown up with Jive per se, but have grown up in that general mindset and how much of that is that, or is it really just reacting to what's going on?
I think a lot of it's just your outlook on embracing change and what technology can do. I think the notion of the consumerization has raised the bar on delivery, both from the software companies into the companies, but also from the CIO out to their constituents. Right, what you used to package up and distribute out to your employees and they had to live with it, they don't expect, that their expectations have gone up, which I think is part of what's creating the opportunity for bringing these, more, new thinking, agile companies into the equation.
I had the rare opportunity to watch a customer advocate of our products in action within his company. It was a state agency, as he sold the technology the new way.
Does he know you watched?
To his manager. I was invited.
Okay,
that's why it's rare,
okay,
right?
Yeah.
I was invited.
Seemed a little
very, very
creepy at
rare,
first. Okay,
right?
better, yeah.
And in fact, the room looked like this, and the potentates of the state agency, which employed thousands of people, were at a table, and he finished his presentation about this great new way of doing analytics with Tableau. And one of the veterans said, well, look, hey, he gave him kind of the whippersnapper speech. Say, hey, look, one thing you got to realize here is people have been here a long time, right?
Son.
And change and this and that, and he goes on. And this champion, who, to your question, was basically, I'd guess 21, a year or two out of college, wants to go new way, downloaded our tools from a website like these guys. Yeah. It's just rare to go to improve the state agency for the people. And literally, I watched him as he said to the potentates lined up, he goes, let me just get this straight. Is it our strategic plan at this state agency to improve people, to improve things for the 20 million people of this great state at the rate our current people are dying?
And then he announced for governor?
I mean, so the youth effect is not the only one.
And he won.
And literally 90 days later, we closed the biggest deal in our company history at that time. And he's these young, driven, passionate advocates. Great management teams love them. They're part of the team, and hiring young, disruptive folks is a matter of strategy for many people, and I think that story exhibits why. And they're in a much better place today, and your taxpayer dollars are going in a better way because of them. So I think it is an important fueling factor, and I've seen it in action.
Let me ask one final sales question, which is leaving land and expand aside, but for the traditional sale, I assume you still do knock on those doors and you have to sit there and pitch next to IBM or whoever the hell it is you have to pitch next to. Are there tools that you use, not your own tools, but other tools, are there things that have made the sales cycle faster in general, and this for really anybody, or is it really simply you just have to have really good salespeople?
I think you have to have reasonable price points and very short deployment times, or else that whole thing goes out the window. So give Salesforce and SuccessFactors and a few of the other SaaS vendors credit for having said you don't need to do 2 years worth of custom deployment in order to install something. Take it like this. It's probably 75 or 85% of what you wanted. It's not perfect, but if you do it like this, we can install in 60 days and you're up and running and live. And we use Salesforce, and we went from 0 to live in 60 days. And at the user level, they don't have to do anything. They don't have to learn a lot of change management and all. So credit the cloud guys for sort of forcing easy to use, short deployment cycles, rapid everything onto the marketplace. And I think the guys I feel sorry for are the enterprise vendors who are doing it sort of the old-fashioned way. The old BI guys, the database guys, the ERP guys, where you still have to do years worth of work to get to the starting line. I think they're in huge trouble.
Yeah, we've seen actually similar advances by taking tablets, putting them in the hands of salespeople, intersecting the geolocation of where they are and their prospects literally in the 3-block area where they're standing, intersect that with the data about the customer and literally build their calling list while they're sitting in Starbucks in the morning. That's been a game changer for how we go to market.
Well, can I just ask you, I'm curious, because you're part of one of these even though the stuff you're talking about is selling new products and improving productivity, et cetera, but you're also part of a very large legacy company. So I'm curious, is the stuff you feel you're pitching to prospective clients, or the stuff you're talking about, is it being employed by your own company?
Absolutely. I mean, everything we do is mobile first. If you walk into our retail stores, we used to keep all of our sales reps hidden behind a counter and a cash register. You walk in now, you meet somebody with an iPad, they sit there, they hand you your merchandise, they swipe the card, you're done, you walk out. So everything we do, our truck dispatches, everything we do is mobile first. And I think that's part of what we're enabling in our customer base is how do you take, just like at Amtrak, how do you take that ability to mobilize your business process? It changes the game, just like what you described with the Salesforce. And I think that's part of what's driving this revolution, not just in efficiency as in cost savings, but it's innovation in the experience models that people are delivering to their customers. And I think that's why you're seeing the investment continue to go even in these tough economic times.
I think the tablet has changed everything for the mobile sales professional, less the Armani suit or whatever. It's really changed everything because they can have real time, the most recent presentation,
How reactive are you guys to the device makers, to the hardware makers? In other words, everyone keeps talking about what's the next, is there going to be a next Apple device, is that going to be a watch or whatever, but I wonder, whatever the next type of, either a significant evolution to smartphones or significant evolution to tablets or something that we legitimately are not thinking about that everyone's going to be holding here in 5 years. Are you guys kind of, do you have to be reactive to that, or can you kind of build ahead of that? Is there any way to build ahead of that, or when that gets introduced, do you have to figure out a way to make sure your stuff works with that?
It's all about when it hits the mainstream. So if a new tablet came out today, unless there were millions of people using that for business software, meaning that was going to become the primary app that they were using to analyze analytics with Tableau or run Jive on or whatever, that's when you embrace it, and you go after it in that way. You have to be constantly watching, and we've gone back and forth on these HTML5 interfaces so we can support all the mobile devices, vis-a-vis going native for speed and performance and building APIs out so various users and businesses can do their own thing against a set of APIs. That's really important in embracing the mobile user. We're still, all the data says crossover between laptops and tablets. You still got to support both really well. I walk into enterprises every day, I'd be curious if you guys do, where all the executives have their iPads and MacBook Airs out on the table, but they're beating the shit out of me about supporting IE7 inside their enterprise. So what's up with that? Right? Hey Tony, this is great. But could you make it run faster on IE7? Well, I send you a nasty text on my iPhone.
Tony, I didn't realize you were pitching the time warp. So that's good to know.
I don't think it's so much about the device. We've given all of our field folks iPads, and the experience of the software on it is what will make the difference for it. But I think what's really changed is the speed to information, how quickly you can turn raw data into knowledge now. So if you look at what the telcos are doing with all that mobile information, they're indexing it, they're analyzing it, they see customer patterns, they know what's being downloaded, they know what songs are most popular in the last 60 minutes. The gap between an event, an action being taken, and its ability to be analyzed has dropped from, the ERP closes the month or the quarter, and now you get to analyze how the period to periods compare. Now it's real-time customer preferences. It's amazing.
Within your own business, and obviously that's what your company is largely relying on, is being able to take all that data, find that machine-to-machine data, and structure it. But I wonder, for yourself as a CEO, how reliant are you on big data for yourself? And I guess the question, you and I had this conversation last night, which is the old Moneyball question, right? Which is, there was so much attention to Moneyball, and this is how you should build baseball teams. And then a couple people won World Series who did it the exact opposite way, they were hunch GMs, et cetera. Mm-hmm. So how do you balance those two things? The fact that you're a data company, you clearly believe in the value of structuring this data, but do you ever look at it and say, yeah, I see all those numbers and I see the trends, and I don't think that's right?
I think good business judgment and leadership still counts for something, or else they just get rid of me. In fact, all of us could do something else. But the data does matter. They're using. You can't spot trends without the data. You can't find the needle in the haystack without the data. So having the forensics, whether it's a Tableau or us or something, having the forensics to be able to go look at that data, the visualization of it is hugely important. The brain can't see all that data. Right. You can't look at the screen, the matrix screen, and watch the zeros and ones. You can't make any sense out of that with the brain. So you still need some software to help you translate it into something to which you can apply judgment.
Let me ask a broader question. We talked at the beginning of this talking about high valuations and kind of the, for lack of a better term, trendiness of enterprise software companies. Has that translated into hiring? We hear so often how hard it is to hire, particularly engineers in the Valley, and how competitive it is. Are you seeing any sort of, Christian, maybe for you or for Deven, for your portfolio companies, is there any sort of change? Do you find it easier to hire today than maybe it was a year ago?
You're bringing up one of my favorite subjects. Let me go back more than a year, though.
1982.
So there was this, I forgot who first said this, but there's this brilliant quote an engineer had on a blog a year ago. I forgot who it attributed to, but it basically said, one of the great tragedies of our time is that the world's most talented inventors and engineers on the planet today are currently spending their time getting people to click on more ads or fill a shopping cart with more stuff, right? And these, the Groupon phenomena and the Zynga phenomena and these very consumer-oriented things that attracted a lot of dev talent for a lot of time, it has been fantastic for us. I know certainly for Splunk, and I would guess the others.
Same.
To be a counterpoint to that, there are so many, especially bright young engineers, who don't want to work on getting people to click on more ads. That's just not interesting to them. And if you've ever recruited an engineer, you know the most important thing in attracting them is interesting work, interesting problems, great missions, right? Mm-hmm. In a way that's much more meaningful than a Google or Facebook engineering team can usually deliver. They do a lot of great work. But so it started about 3 or 4 years ago, just being a counterpoint to this ridiculous B2C trend that went so frothy, and now the fact that business software generally is more in the spotlight. It's actually even gotten better, but I would call that an accelerating factor, not like a new phenomenon.
Does anybody disagree with that, or is that universal sense?
We're still finding it really hard, particularly in areas like mobile, and like particular specialization areas that we're trying to recruit in our enterprise companies. It's still really competitive. Now, it might be less competitive against Facebook, but then it's competitive against these guys.
Right.
So there are more and more enterprise companies that are being funded. There's a lot of focus on this. So I would say it's easier to recruit against Facebook and Google, but it's not like we're finding it in most of our enterprise companies easy to recruit.
It's better. It's better than it was, because I agree. However, Facebook and Google can pay and some of the counter offers I've seen are outrageously. They're actually egregious, offers. And the young engineer, and particularly in mobile, if that's what they're seeking, compensation, that's where they go.
Christian still has a smile on his face because he moved the company up to Seattle a few years back.
Right.
Saying, all you Bay Area guys, you're having that problem. Yeah. No, but it's I've seen over the last 30 years, you see some waves come through. So Apple was the wave in the valley of the 80s, and then you had Cisco in the 90s, Google in the early 2000s. I've never actually seen it like it is right now, where there's 10 or 15 companies all on the move, all in high growth mode.
Do you have satellites? I mean, I know he's based outside, but do you have satellites elsewhere with significant engineering and talent, like the group so you are able to hire somewhere else?
We moved an office up to Seattle, and we're expanding overseas as well. So
we have 250 people in Portland. So
fantastic, good. 2 final questions. One is when it comes to valuations, are you because of how high you are valued, are you too big to get acquired at this point? And I don't mean too big. I don't mean like the silly eBay, Airbnb is too big to be acquired by eBay. I mean legitimately that somebody would look at you guys from an earnings perspective, et cetera, and say, you know what, I get why they're valued like that, but considering that we'd have to pay a premium, you can't do it. Where that valuation means you are an independent company.
Well, in the public markets, the only real defense against an unwanted approach is a high stock price. It really is. It's the only defense. So that's what our job is, to make sure that we build great products and keep customers happy, and that translates into revenue, which translates into a stock. The stock price is just an outcome, right, of those other activities. But your only real defense is good market cap.
Do you want to see if you've got a competitor, and Tony, this is obviously a question for you since it's a little over the 1-year anniversary of Yammer, which is one of your competitors. When you see one of your competitors get acquired, but particularly by a large organization, so is it something that you're worried about because you think, man, if they get this thing right, given the integration, this could be a real problem for us because the reach or you say, oh, this is good because tech M&A often works out badly, they might destroy it.
Well, certainly the latter.
I guess, what was your thought? I mean, is that how you actually felt when it got acquired?
Yeah. For the first day, we were celebrating because, Microsoft's the place innovation goes to die. And it's not the place it goes to thrive.
That slogan got rejected, apparently, during marketing.
However, if they get it right, given their size and scale and their reach and their channels and the grip they have on the corporate information technology organizations for workforce productivity tools, it could be very challenging. And so back to Godfrey's point, you got to use the strength you have, which is move as fast as you possibly can and innovate and grow as fast as you possibly can. And at the same time, it validates even further the fact that there's a real market here. When a company of Yammer size and scale gets acquired, for that multiple, that says something, that there's something here.
Has it gone? It's been 54 weeks. Did it go to die?
Yeah, it's dead.
Dead. Good to know. Good to know.
We got that one answered definitively.
Apparently so. We've got time for a couple questions if we've got them. Do we have them? Mark.
Yeah, I'm curious. You talked a lot about the change in the sales process, sea change, so to speak. I'm wondering, what do you look for now in salespeople? Do you look for the experienced salespeople you hope to change the way they sell, or do you look for people with different kinds of experience, hope that they can fit your model?
Well, a good athlete is a good athlete, but at the same time, our business is so different that we have to say to people when they come, you have to be willing to unlearn everything you knew about enterprise software and learn it this way, because our way of doing it is so different than the rest of the marketplace. And it takes folks a while to unlearn a lot of bad habits over the years and learn how our customers expect for us to behave. So it's more about them being flexible and having lifelong learning skills is more important to us.
I think we look for people that can sell business value, and technology as the underlying root of that. The 30-year Oracle person that, those days are over. What you look for are, people that are probably midway through their career and have a bunch of pattern recognition around discovery and the selling process and how to compete, in my case, against, big, slow-moving companies, and that can sell a new technology into an application group, like the marketing organization, or into the corporate IT. So it's daunting, in terms of the repertoire that's required. But back to the point that was made earlier, salespeople want to be in those organizations where it's high growth. They have direct line of sight to the executive team. They use the technology to sell with, and we've had no problem hiring top flight enterprise sales executives.
Any other questions? Yeah.
Thank you. Has been trying to bring sexy back to enterprise for a long time, or so he says. And I know that certain things about starting an enterprise-focused company have maybe gotten easier than they were in the past. But what advice would you guys have to a young entrepreneur thinking about starting a company either in consumer or enterprise? What are the challenges and the advantages of going towards the enterprise route?
Well, we're a box customer. I think the thing that they did that is pretty much consistent with what you've heard up here is that they built some great software that everybody really liked to use, and it went through a viral adoption phase. By the time we were ready to look for that category of software, and we looked across at 3 or 4 competitors, most of the people in Splunk were already using Box. So I just think they followed that. You iterate with the version 1, you find out what people like, you continue to iterate on, you shoot your way to the target, you follow the dust patterns as opposed to planning for one big shot. You just start iterating, and they did a beautiful job of it. Our employees love to use the software, and voila.
I'm going to ask, yeah.
Curious, I've talked to a couple of you guys about this, but there's a part of the bubble in enterprise, what have you, is that there's a lot of money going into the enterprise software world, but I'd be curious about sort of how much money each of you have raised pre-IPO and sort of how that impacted sort of how you run the company and so on.
Well, before I said that the land and expand disruptive business model commonly practiced these days by technology companies, selling to enterprises is also really good for the company. I mean, it's great for the customer, obviously, but it's also great for us. And one of the reasons it's great is it's really capital efficient. So because you're not deploying these giant field teams in advance of any revenue, among other reasons. And so for us, to be specific, we raised $15 million total in venture in our lifetime as a company, and we didn't use $1 of it. All 15 of that is unspent in our bank account today.
Wow. We raised $45 million, and most of it had been spent before I arrived. That was my little shit sandwich. I have a board member sitting back here. He forgot to tell me that. He's in the recruiting conversation.
Yeah. We raised $57 million, and we spent about 10 to 15 of it, most of it before I showed up as well.
I'm going to ask one final very quick question, just go down the line. Within your own organizations, and obviously don't name your own company, within your own organizations, what's the single, and this just might be a very big thing like people's option, what's the single most important piece of enterprise software your business uses? The one that you couldn't do without the most?
I think it's our collaboration tools.
That's your own. I'm saying somebody else's. You must buy stuff.
No, really, our collabration tools make the difference in what we do.
It's our platform. We can't live without.
But I'm going to continue.
So Salesforce for us.
Salesforce,
yeah.
Outside of our own, it's Salesforce.
Yeah, same for us. Probably Salesforce and NetSuite.
Salesforce and NetSuite.
Fair enough.
Front office, back office.
Really want to thank the panel and thank you all for coming. Appreciate it.